Hey everyone, welcome to today's webinar on quarterly estimated taxes. Glad you're here. It's that time of year, depending on when you're watching it, but when I'm presenting this is that time of year when tax season is upon us. And thinking about quarterly estimates, though, is something we think about through the entire year. So we're going to talk through how it all works today and give you some tips and some guidelines for making it easier, hopefully, and understanding it better. So kick off with just a quick intro on me. I'm Michael Reynolds, Certified Financial Planner. I own Elevation Financial. We're at elevationfinancial.com. I'm a financial advisor, and I help people obviously with money stuff and investing and financial planning, as well as working with a lot of business owners also. So a few fun facts about me. I play the cello. Not so much anymore, but around holiday season, I usually break it out. I eat lots of sushi. Sushi is my favorite food. I love anything with a racket, tennis, pickleball, ping pong, big Star Trek nerd, as you can see by the Enterprise blueprint behind me on the wall. And again, you can find me at elevationfinancial.com. So let's talk about quarterly estimated tax payments. This is something that sometimes trips up business owners, freelancers, 1099 contractors, people that don't get paid through typical payroll systems. So in general, if you own a business or earn money as a freelancer, this applies to you. You have to make these quarterly estimated tax payments. And the reason you have to do this is because you're not paid on salary. So a lot of people are paid by salary. They get a paycheck through their payroll. Their employer withholds income tax when you get paid through payroll. But there are many who are self-employed, business owners, individuals who don't get paid through typical wage income. And so they don't have those withholdings coming out of their paycheck. There's no automatic withholding method. So for those taxpayers, it's necessary to pay these quarterly estimated tax payments. And so who needs to pay? Just kind of a rundown on who typically needs to pay. So 1099 contractors is a big one. A lot of times if you're working for an organization and you're a 1099 contractor, which means you don't get paid through payroll, but they just basically give you a check or they direct deposit just a set amount, but it's not through payroll. Sometimes there's a misstatement where people say, oh, are you a 1099 employee? There's no such thing as a 1099 employee. A 1099 is a contractor. An employee would get paid through payroll and is hired as a W-2 payroll or hired as a W-2 employee. But a 1099 contractor is different. That is someone who gets paid directly with no taxes withheld. Also, owners of LLCs. So if you're a single member LLC, for example, and you're paying yourself through owner's draw by transferring money from your business account over to your personal account, there's no taxes being withheld. That's just direct payment, and you are subject to having to pay those quarterly estimated tax payments on your own, assuming you make enough income for it to warrant. S Corp owners as well. So if you're taxed as an S Corp and your distributions are significant enough, so some S Corp owners will pay themselves primarily through payroll, and that means withholdings are occurring. Some S Corp owners, however, have a significant amount of their income coming through distributions, which is kind of a direct payment, which means that those are not taxed with withholding amounts withheld. So you do have to count those into your factors and your calculations when you're thinking of those estimated tax payments. Partners in a partnership, and maybe a multi-member LLC, also is subject to estimated tax payments because, again, you're paying yourself through owner's draw. Also, those with significant investment income, especially retirees, those who maybe have investment income coming through and those aren't subject to withholdings, then that's going to factor in and get you in that category where you need to pay quarterly estimated tax payments. So that's kind of a rundown of an example of who might need to pay. So when are these payments due? When do we have to get these payments in? So there's 4 times a year. And I want you to notice, first off, that they are called quarterly estimated tax payments, but the IRS defines quarterly different than most of us. So that's not a typo. That's actually the way it goes. So the first payment is due April 15th, which is the general tax deadline anyway. So that one's an easy one to remember. That's for the first quarter. The next quarter, Q2, is due June 15th. And it's, again, not the actual quarter, but the IRS quarter is defined as next payment being on June 15th. Then September 15th, and then January 15th of the following year is for that Q4 time period of the previous year. So those are your 4 dates to remember and to keep track of for your quarterly estimated tax payments. Also, be aware that if any of these dates fall on a weekend or a holiday, then the payment is due the next business day after that date. So they will be a little bit flexible depending on where they fall in the week or on holidays, for example. All right, so how much do you pay? If let's say you fall in this category, you're subject to quarterly estimated tax payments. How much do you pay? So it's not an exact science. It can be tricky. There's lots of ways to kind of calculate this. There's tools you can use. You can do it manually. It's going to be a bit tricky, but you don't have to get exact. You generally just have to get over a certain threshold to avoid penalties. And we'll talk about that in a minute. And you want to get as close as possible just to minimize the tax surprise that you might have. So you want to minimize that tax surprise. So generally what you want to do, if you want to go with kind of the default method that a lot of people follow, which is to start with last year's tax return. You would divide last year's tax liability by 4, and that gives you the 4 equal payments you would pay. We'll talk a little bit more about that safe harbor rule in just a minute, but that's one way to start to get a baseline of where you might start. There's also the kind of what I call a 30% method, where you're taking your profit or income for each particular quarter, and you're going to set aside 30% of that for quarterly estimated taxes. And that's going to be a combination of the federal tax rate plus your state tax rate. So in Indiana, for example, at least last I checked, our state tax rate is 3.23%. So you're going to add that to your tax bracket. Let's say it's 22, 24%. That's going to get you to that kind of roundish 30% number to set aside. Keep in mind, this number is based on your net profit, not distributions. So let's say you're an LLC owner, a single member LLC, and in a given time period, your profit is $10,000, just to use a random round number. But you pay yourself $5,000 of it by transferring $5,000 from your business checking account to your personal account. And that's kind of your owner's draw, leaving $5,000 in the bank. You're not just taxed on $5,000, you're taxed on the entire $10,000, whether you take it home, so to speak, or not. So you're taxed on the actual income of the business as a pass-through entity, like an LLC. So you want to base this on the net profit, not just what you distribute to yourself. So keep that in mind. So that's kind of how you would calculate that. So those are some methods of kind of getting to that number. So the safe harbor rule is a really good starting point for achieving the goal of not paying penalties. Because if you don't pay enough in quarterly estimated taxes, you might be subject to penalties from the IRS because you're underpaying. So let's kind of walk through some of these rules and make sure that you can be aware of how to avoid those penalties. So first of all, if you expect to owe less than $1,000 after subtracting any other withholdings, you're generally okay. Now, again, this is not specific advice. You want to talk to your tax professional to make sure it applies to you. But as a general rule, that's kind of the threshold we would use to determine if you have to pay at all. So let's say you have, a decent amount of income, you're making a good solid income, you're going to have to pay quarterly estimated taxes. One method to calculate this safe harbor method is pay 100% of your tax liability for the previous year via those estimated tax payments. Now, that applies up to 150. If you make more than 150 in AGI, then it's going to be 110% of last year's payments. So again, you look back at the previous year, you look on your 1040 tax return, you're going to find that item on page 2 of the 1040 where it says the total tax you've paid, or the total tax that you owe. So total tax owed is what you're going to use to determine how to get that number. So you look back at the previous year, divide it by 4, and that's going to be the amount you pay for those quarterly estimated tax payments. And again, if you make more than 150 in AGI in a given year, then you're going to do 110%. So basically multiply that big lump sum number by 1.1 and then divide it by 4. And that's how you're going to get those quarterly estimates. The other method is to pay within 90% of your actual liability for the current year. That can be harder to calculate though, because often our income can be kind of up and down as business owners or freelancers or self-employed individuals. It can be hard to predict what your income is going to be. So that's why a lot of times I recommend an easier method is going to be look at last year's tax return and get your safe harbor amount from that number. Now, keep in mind, this is not going to necessarily keep you from having a tax surprise, because if you make a lot more money this year than last year, then you're going to have a different amount that you owe total at the end of the year. But this will keep you from being subject to penalties because you followed that safe harbor rule. If your income stays pretty consistent, this can be pretty sound. This can be a pretty good way to calculate it because, again, you're basing it on last year's tax liability, which ideally is going to be similar to this year's tax liability, and you're following the safe harbor rule, so you're going to avoid those penalties. So, again, it can be tricky. If your income is up and down or extremely variable, then tax planning throughout the year can be helpful, but this safe harbor rule will help you avoid those penalties. So how do you pay? How do you pay your quarterly estimates? You can go old school. You can send a check. Some people do this. Not my favorite way, but some people do send a check in the mail. There's an estimated tax payment voucher that you can use. You can download from the IRS website, and it will give you little voucher things that you can fill out and then mail in with your check payment. You can do that. It works fine. I prefer paying online. Paying online to me is the best option because it's instant. I think it's the most secure. You get instant feedback on the confirmation. It's faster. So that's kind of my preferred method. So how do you pay online? You go to irs.gov/payments. And if you don't have an IRS account already set up, this is a really good time to create one because that will let you log in and see your tax history, including previous estimated tax payments. So I'm a big fan of making sure you set that account up online and then log into that account for future tax payments or whenever you want to view your tax history. So again, that's irs.gov/payments, and you can pay directly online. Now for your state, it's gonna vary state by state. In Indiana, for example, this is the address on screen, dorpay.dor.in.gov. Actually, it may have even changed since this. I think they change it sometimes, but you basically Google pay estimated taxes and then your state, and then you'll find your state's Department of Revenue website with instructions on paying online. So it's fairly similar to IRS, but it's going to vary state by state. So I can't give you like a definitive way because everyone could be in different states. And again, the ratio, it's going to depend a lot on different factors, but the 5-25 ratio is fairly reasonable as a starting point. 15% of the state, the rest of federal. That's going to be kind of a breakdown, but customize it to your state income tax rate. So if you have a higher state income tax rate, your ratio is going to be a little bit different. And again, be sure and set up those profiles each time for easy access. So how do you kind of plan for this and logistically set up your systems to make this easier? So I'm a big fan of setting up a separate personal savings account that is specifically designed just for estimated tax payments. And keep in mind, this is a personal account. And the reason is because as a pass-through entity, like an LLC owner, freelancer, 1099 contractor, you are taxed, not your business. So again, even if you own an LLC, even an S Corp, you are taxed directly. Your business never pays tax as these types of entities, which means that all of that income that is reported gets attached to your personal tax return, your personal 1040. It all kind of flows through into that one tax return. So when you pay taxes, including quarterly estimated taxes, you're paying personally. So they should logically be paid from a personal account. So what I typically do is, pay yourself directly from your business account. Go ahead and do that as you normally would, but then set aside a certain amount each month into this tax account based on the calculations you've done so that every quarter you have the proper amount in that bank account and it's ready to pay online with no surprises. That way you're not scrambling to gather the cash together, or worse yet, have a big surprise at the end of the year. You've basically set aside that money already. You've earmarked it to belong to the government, and you can kind of put it out of sight, out of mind. So I like a whole separate online bank for that. So it's kind of out of sight, out of mind. And it feels like I've already kind of withheld it and paid those taxes. I use Synchrony High Yield Savings, no affiliation or endorsement implied or guarantees or anything. That's just the bank I happen to use. There's lots of online banks that offer a high yield, good interest rate as well, and make it very easy. So I like this one I use because it's very easy to go online and click view account numbers. You can just copy and paste account numbers when paying online. I like the way it works. So I would say just pick a bank that is easy to use, has good online systems, and is high tech. So again, you're transferring money into that account as a bucket for those quarterly estimated taxes. Pay yourself first, then move the money to the tax account and pay online directly from that account. Now, keep in mind, quarterly estimated taxes are paid as a household. So if you're married filing jointly, and your spouse owns a pass-through entity, this must be factored in. Or if you own more than one business, the same rules apply. Net income for all pass-through businesses are aggregated together to determine that tax liability. So you have to kind of take all that income from different sources and apply that to your household tax return, so to speak. So keep that in mind. So how do you track your payments? I use a spreadsheet for this. This is a pretty easy spreadsheet to make. You can just take a look at this screenshot and just make your own. It's pretty simple. So I like to track them every year just to make sure I have a good record. So whenever I pay quarterly estimates online, I have 3 columns. I have the date paid, I have the amount paid, and then I have who it's paid to. So in this case, federal taxes and state taxes. So that way I can go through very quickly and easily and just say, hey, here's the record of what I've paid. And so when it's time to file taxes, whether you're doing it yourself or working with a tax preparer, you have that record ready to go to be plugged into your tax return to get accurate data. I actually think I've added a 4th column since then where I've put the period it's for, which is Q1, Q2, Q3, or so forth. So that just adds a little extra layer of clarity and context there. All right, what if you don't pay? What if you don't pay on time or don't pay at all? First of all, if you don't pay these, you're going to end up with a large tax liability when you file your taxes in April. That's never fun. We don't like that, right? We don't want to have this massive tax bill. You have to scramble to find the money somewhere. You haven't prepared for it. It's a big hassle, very painful. We don't want that. So it's better to space it out and prep for it along the way, right? Also, interest and penalties on the underpaid tax liability. The rate's going to vary, so I'm not going to give you a rate right now, but it's, you do get charged penalties and interest when you don't pay those estimated taxes on time or enough paid. And we don't want to pay penalties. We don't want to pay extra. So we want to avoid that. And more importantly, I've noticed that in working with business owners a lot on this, it starts a pattern that can be really difficult to recover from. I just can't count how many business owners I've worked with that we start working together and we kind of uncover they have this tax liability, they owe debt to the IRS, they're on a payment plan, plus there's, another big payment coming up they haven't planned for. It's just really hard to recover from getting behind with the IRS. It's just a big hassle. It's very painful. So we want to keep up with that. So I cannot stress enough how important it is and how much better your quality of life will be if you pay your quarterly estimated taxes and keep up with them and make sure they're paid on time and paid properly. So this is a big deal. So if you're self-employed or a business owner, this is really important. Keep up with those taxes, get caught up, do whatever it takes to get on a plan, get caught up and stay caught up. It'll make your life a lot better. Along with that, consider hiring a tax pro. I know some people like to do it themselves, totally fine. But I know a lot of people that can benefit from getting help from a tax pro for things like calculating quarterly estimates, making sure they're paid on time, just generally giving tax advice. So, a good tax pro is really, really helpful in this case. So consider making space in your life and business for that. All right, so that's a quick rundown. As always, I welcome questions. So I'll pause here for just a minute or two to give people time who are joining on social media or via the registration to pop questions. And you're welcome to put questions in. They will show up here and I'll answer on the spot if any come in. So I'll kind of pause there just as people are maybe forming questions or to give people some time. You can find me for follow-up questions with that email address, which is michael@elevationfinancial.com, or post questions here if you want. So I'll just kind of wrap up by saying that, again, this is one of those things that I see tripping people up quite a bit. These quarterly estimated tax payments are no fun to think about, but they're really, really important. Keeping up with your quarterly payments will, again, really increase your quality of life as a business owner because you won't get behind. You won't have these tax liabilities dragging down your cash flow. It'll just make life a lot better. So follow those systems, follow the safe harbor rule at minimum to help calculate your tax liability. Set up a separate account to set aside those tax payments and get them ready for paying online. Track them in a spreadsheet or whatever system you want to use to make sure you track what you've paid, when you've paid it, so you have those numbers ready. And understand that your business is not taxed. You personally are taxed. So all income from different sources that are self-employment income or business income, it all adds up and flows through. and that aggregates together to calculate your tax liability. And that's what your quarterly estimate should be based on. So with that, I don't see any other questions coming in, so I'm going to wrap it up there. But thanks so much for joining me. Again, you can find me on the web at elevationfinancial.com. And my email address is michael@elevationfinancial.com. And you're welcome to send me questions anytime. Always happy to answer questions about this or anything else I can help with. So good luck to everybody who is working with quarterly estimated taxes. If you have any questions that maybe you get stuck on, send me a note. Happy to send you resources or help any way I can. All right, with that, thanks for joining me, everyone. Appreciate you being here. Have a great day. We'll see you next time.